I've got your November 2023 housing market update for the city of Edmonton. We're looking at the most recent statistics available from the Realtors Association of Edmonton, which is the October statistics. We'll be looking at the market as a whole. Then we'll look at detached homes. We'll look at half duplexes, townhouses, and even apartments. And then we'll be looking at price trends that are happening in the market. So make sure you watch to the end to get all the info. All right, let's jump right into it. All right, let's talk about the market as a whole. So we're gonna start with everything in Edmonton. So that includes detached, half duplexes, condos, all sort of mashed together. Gives you a general overview of how the market is performing. We'll get into the individual pieces afterwards. So the market as a whole in October had an absorption rate of 28.24%, which is just below the threshold where it gets into a balanced market. That's a slight dip from last month when the absorption rate was just over 29%. There was 4,604 listings at the end of the month, and there had been 1,300 sales. But it's a pretty small easing, not really a big surprise there, especially since we're getting into the later fall months. There is a natural slowdown, so that actually looks quite healthy, not a huge change month over month. So the number of active listings has continued to drop. It's down 6.23% from last month and down 13.64% from October of last year. And the sales had a 9.41% drop from last month, but they're still up substantially from last year. They're up 26.58% from October of last year. So this is the same theme that's been going on for the last several months, where the sales activity is still stronger than it was last year, even though interest rates are way higher than they were this time last year. The average price for the market as a whole was sitting at $378,339. Average days on market sitting at 46 days versus 44 days last month and 49 days last year. And the market distribution, you've got 19.25% of the market under 200,000, 17.2% between 2 and 300,000, 24.22% between 3 and 400,000, and 18.61% between 4 and 500,000. Then there's 10.32 between 5 and 600,000, and just under 5% between 6 and 700,000. After that, you got 2.23% between 7 and 800,000, and just over 1% of the market between 800 and 900,000. After that, it's less than 1% per category. All right, semi-detached homes. This is basically half duplexes. The absorption rate was sitting at 37.32%, which is square in the middle of a balanced market. That's held relatively steady from last month. It dropped a little bit. It was just over 40% absorption rate last month, but it's still in that balanced market territory. Average price was sitting at $400,125. There was 351 active listings at the end of October, and there had been 131 sales. So the active inventory has only dropped a little bit from September. It's down 2.23% from last month. And the sales are down 9.66% from September. So relatively consistent seasonal adjustment that I would expect. Average days on market was sitting at 44 days versus 36 days in September. So a bit of a swing there, but we are dealing with a much smaller market segment. So it doesn't take much for the days on market to creep up. If you have even a dozen or two properties that sit on the market for quite a while, that's going to start pushing up the average. Now, in terms of market distribution, 1.6% of the market under 200,000, 19.6% of the market between 2 and 300,000, 43.4% of the market between 3 and 400,000, and 25.4% of the market between 4 and 500,000. Then there was 6.2% of the market between 5 and 600,000, and 2.4% of the market between 6 and 700,000. So much different market distribution there, with the biggest chunk being between 3 and 400,000. You'll find some pretty good half duplexes in that price range. Obviously, it's not as expensive as detached homes, and so in that regard, I'm not surprised that this market is performing a bit better than detached homes. A lot of people that maybe would have preferred to buy a detached home, if they can't quite get what they want in terms of the condition of the house, the age of the house in detached home based on their pre-approval amount, I'm starting to see more people move into the half duplex market. All right, row/townhouses. So this is basically going to include mostly townhouse condos And then what we would call the row houses, or residential attached is the term I typically use. That's going to be a lot like a townhouse, except it's single family home titled. You're going to have either neighbors on both sides, unless you're an end unit. In that case, if you're an end unit, it still feels a lot like a half duplex, but you're attached to more than one other person. This market is performing quite well right now with an absorption rate of 43%. So that's over the middle of the balanced area. That has actually improved from last month. In September, it was at 38.26%. So it's actually performed even better than September. The average price was sitting at $258,621. There was 506 active listings at the end of the month, and there had been 218 sales. So the number of active listings was down 6.47% from last month, and the sales were actually up. They were up 5.31% from September. So that pretty much explains the shift. Instead of having a slight drop in sales from last month, like we saw in all the other segments so far, we actually saw an increase in this. So that, of course, would make it perform a bit better. Average days on market was sitting at 42 days versus 41 days last month. And you can see that the market distribution is a lot different for townhouses and row houses, with 33.8% of the market under 200,000, 35.3% between 2 and 300,000, and 26.8% between 3 and 400,000. Then there's only like 3.1% between 4 and 500,000, and less than 1% between 5 and 600,000. So much different market distribution there. Again, I find if people can't afford to get what they want in a half duplex anymore, this is the next sort of market that they move to, either looking at a townhouse, condo, or a residential attached property. Now let's look at the detached home market. The detached home market had a 28.08% absorption rate, pretty similar to the market as a whole, just below balanced market territory. So technically you could say it's a buyer's market, but it's not a strong buyer's market. Of course, depending on the market segment you're looking at, whether it's older homes, newer homes, it really does vary a lot. I'm planning on doing some other videos where I dig into some of those details a little bit. But for the detached market as a whole, technically buyer's market, but not a huge change again from last month when it was just over 29%. So still pretty stable. Average price was sitting at $475,979. There was 2,482 active detached homes at the end of October, and there had been 697 sales. So the active listings is down 6.66% from last month and down 27.38% from last year. I know a lot of buyers out there are definitely noticing the lack of inventory, so it is making the nicer properties pretty competitive still. The sales are down 10.53% from September, but up 17.94% from October last year. So even though we're seeing a slowdown as we get further into the fall months, still outperforming last year's numbers. Average days on market was sitting at 41 days versus 42 days last month and 46 days last year. And the market distribution, you got about 1.5% under 200,000, 9.14% between 2 and 300,000, 26% between 3 and 400,000, and just under 28% between 4 and 500,000. So the biggest segment of the market in October was between 4 and 500,000, with the 3 to 400K range also pretty competitive. And there was 17.35% of the market between 5 and 600,000. Then you got about 8.5% between 6 and 700,000, and 3.8% between 7 and 800,000. Then there's only just over 2% between 8 and 900,000, and 1.1% between 900,000 and $1 million. This market, there's a lot of different segments of the detached home market. In my experience, the cheaper properties under 350,000 are incredibly competitive for buyers. If the property has all the major upgrades done, it doesn't necessarily need to be like completely renovated, but if you don't need to replace the roof, if you don't need to replace the windows or the furnace, and you don't have any of those big, like desperately needed expenses coming up right away, and the property shows decent, you know, maybe it's got some decent floors, decent kitchen, not necessarily totally redone kitchen, but at least livable. Those are the properties I'm finding are the most competitive. The interest rates have driven down max purchase prices for first-time home buyers especially, and that tends to be where a lot of first-time home buyers are landing, since in most cases they have less than 20% down. A lot of them have 5% down, but they're usually not coming forward with a big chunk of equity from a previous property because it's their first time, and therefore they're looking at lower purchase prices. And it also seems like when you get into the newer properties, those are also more competitive. Whereas if you're looking at older properties that are requiring work. They're not as indesirable of neighborhoods. Those ones, those markets, I'm seeing things move a lot slower, and it's not uncommon to get no offers on some of those properties if they're not quite competitively priced. So things are still moving. We are into November now, so I would expect the next few months to be relatively slow, but they've been holding up pretty good for the detached home market since we've gone through the fall months so far. All right, let's look at apartment condominiums. The absorption rate was sitting at 20.08%, so pretty much in the middle of a buyer's market. It's definitely rough out there for apartment condos. If you're listing one of these, you'll notice that you don't get a whole lot of showings, even if you're competitively priced. The average price was sitting at $201,920. There was 1,265 active listings at the end of the month, and there'd been 254 sales. So we got a pretty good chunk of inventory on the market for apartment condos, but there's not a whole lot of sales. With that said, the inventory levels are still dropping. They're down 6.37% from last month, and down significantly from last year, down 38.77% from last year. And the sales are down 16.72% from September and down 21.85% from October. So this is one of the exceptions where condos are actually performing worse this year than they were last year. It's been a rough market for apartment condos. that's the easiest way to put it. Now, the average days on market was sitting at 63 days versus 54 days last month. And you can see the vast majority of the market is under 200,000, with 67.3% under 200,000 and 23.9% between 2 and 300,000. Then there's only 6.2 between 3 and 400,000 and 1.3% of the market between 4 and 500,000. Now let's get into the benchmark prices. All right, so the benchmark price is what we're going to look at now. This is probably one of the better statistics to look at if you're wanting to track changes in value. Benchmark price for the market as a whole, so that's everything sort of smushed together, was sitting at 369,000, which was down 1.1% from last month, but up 0.6% from last year. And then if you look at the trend over here, the benchmark price trend over the last 13 months, you can see that in October of 2022, we were still dropping, bottomed out in January, and then we're kind of working our way up until about June this year when we peaked, dropped a little bit in July, moved sideways for a couple months, and now we're actually seeing more of a drop going into October. That's for the benchmark price as a whole. I've got the chart there. For single family homes, the benchmark price was sitting at 440,000, which was down 0.7% from last month and up 2.1% from last year. Apartments had a benchmark price of 175,000, which was down 1.2% from last month and up 2.5% from last year. And townhouses had a benchmark price of 229,000, which was down 2.1% from last month, but up 3.9% from last year. So we're seeing a pattern where all of them are down from last month, but up from last year. And that basically goes back to that benchmark price trend where we were dropping this time last year and already dropped a bit and then worked our way back up. And now we are dropping a little bit again too. So far, I'm not expecting it to drop as much as it did last year. If it does, it's definitely started dropping later than it did last year. And if you've been looking at the news for Canadian real estate as a whole, a lot of bad news coming out for the Canadian real estate market. You might be confused by what the heck is going on in Edmonton, or if you look at Calgary, Edmonton and Calgary are performing much better than pretty much anywhere else in the country. And that's because our markets are a lot different than the rest of Canada. You're hearing big price drops in Vancouver and Toronto. Doesn't really seem to be happening in Edmonton. I would not expect it to happen like what you're seeing in those markets. That's something that I'll probably cover more in some other videos. So hopefully you got value out of this section of the video. If you want to get more like this, make sure to like and subscribe. And you can always go to booktrevornow.com if you want to set up a time for a free consultation call. Ask me anything you want. All I try to do is give you as much value as possible. What's in it for me is that if you like me and we get along and I give you value, if you do end up buying or selling in the next year or two, then I hope you work with me and then we can go from there. So thanks so much for watching. If you click over here, you can subscribe. And if you click over here, you can watch another video.